tariffs could cost you thousands. President Trump just doubled steel and aluminum tariffs to 50%, and global markets are feeling it. U.S. stocks are sliding, volatility is rising, and your cost of living? Going up. What does it mean for your wallet and your investments? Let's break it down. Hey there. Welcome to your go-to channel for decoding Wall Street. If you're into market trends, money moves, and smart investing, you're in the right place. In late May 2025, Trump announced a major tariff hike from 25 to 50%, aimed at protecting American industries. Markets? Not impressed. Back in April, earlier tariff rumors had already rattled investors. The S&P 500 dropped 0.8%, with a dramatic intramonth plunge driven by tariff fears, the worst volatility since the COVID crash. The Nasdaq 100 entered bear market territory, and U.S. stocks lost over $5 trillion in just 2 days. Volatility surged. The VYNX hit 50, a level not seen since the pandemic panic. But it's not just markets reacting. The real hit is coming for households. The OECD now expects U.S. GDP to slow sharply from 2.8% in 2024 to just 1.6% in 2025. Blaming tariffs, policy uncertainty, and trade tensions for dragging the economy down. That sharp slowdown has economists warning a recession could hit by the end of 2025. Prices? Going up. Yale's Budget Lab says tariffs could cost the average household about $3,800 per year. A new car? It might cost you $2,000 to $10,000 more. That iPhone in your pocket could jump in price by 40%. So yes, inflation is happening and prices are rising, which means American consumers are likely to feel the impact. At the same time, the risk of a global slowdown has been gradually increasing. Industries are bracing for impact. Autos, construction, and packaged goods all face higher input costs and shrinking profit margins. Sure, domestic steel producers might get a short-term boost, but in 2018, similar tariffs caused major price hikes that hurt more manufacturers than they helped. And now, retaliation is coming. Back in 2019, U.S. farmers and manufacturers got slammed by global counter-tariffs. Today, Goldman Sachs warns that up to 500,000 U.S. jobs could be at risk. The global fallout is escalating fast. China slapped 125% tariffs on U.S. goods and is cutting off rare earth exports, which are critical to U.S. tech manufacturing. After Trump floated the idea of 50% tariffs kicking in June 1st, European leaders pushed back, saying it'd hurt both sides. Canada and Mexico are also facing U.S. tariffs, though some trade under USMCA remains unaffected. Markets briefly rallied 9.5% in April after a temporary tariff pause. But let's be honest, uncertainty is here to stay. Right now, Trump's tariffs are shaking markets, squeezing industries, and hitting American wallets hard. And the future? Still unpredictable. Sure, they might protect U.S. producers in the short term, but investors and consumers are already paying the price. Anyone with stakes in autos, tech, or consumer goods should prepare for turbulence. Yes, volatility's high, but smart investors know that's when the real opportunities show up. What's your take? Are these tariffs saving American jobs or hurting your bottom line? Want to know more about investing in the U.S. market? That video's got you covered. Check the link in the description. I'll see you there.